Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a CEO of Treasury Consulting LLP. And today we are going to touch the topic which is known as dilution management. As you very well understand that we are having our YouTube channel wherein we have more than 170 videos, and every day we are launching approximately 2 or 3 videos whereby we try and touch the different parts of the mathematics, like we are touching sometimes we are touching foreign exchange, sometimes we are touching investment management, sometimes we are touching this topic. So this time we plan to touch a topic based upon investment banking, which is known as your dilution management. As you very well understand that a lot of actions which is happening in the market, and especially in Indian market right now, not in outside Indian market, because they are somehow not facing a lot of recession. So a lot of action has been happening in the Indian market, and in this action, technically speaking, a lot of IPOs and everything which are coming up. Like we saw that the Yes Bank QIP, which is qualified institutional placement, failed miserably, right, in the market, and they were forced to take this qualified institutional placement out. Similarly, recently the L&T Teleservice, the L&T, L&T Technology Services is coming up with offer for sale, right? Similarly, ICICI Prudential, wherein Prudential want to cut down the stake in ICICI. So there are a lot of things which are happening in the market. The pipeline is very robust, but at the end, we very well understand that market is full of fundamentals, market is full of sentiments, emotionals and all. Whenever we show that how market would move in. In that regards, we well understand that I bankers, investment bankers set alongside M bankers play a very important role, because it is the I bankers who make sure that transaction to be happen in a genuine way, in an authorized way, and things should be completely in control, or all rules and regulations to be filled in, and they are facing a lot of problem, lot of stress, not problem, stress in the sense like they never be sure, there are a lot of queries that come into, and so on and so forth. And in all these, stress management play a sorry the dilution management play a very important role. Now first we need to understand exactly what do you mean by dilution management, then and then we can move forward. Now dilution management is exactly a very good topic. If you carefully see that, let me increase the little bit font for you people. Dilution management is an art performed by iBankers, whereby they would be using all the below said options to increase the holdings of the promoters in their company. Yes, there are a lot of thoughts we have in the market. The thoughts suggest that dilution management is right or dilution management is wrong. iBanks are doing their duty effectively, or sometimes they are not doing their duties effectively. So there are a lot of things which are there in the market, but nonetheless, as you very well understand that business is business, so sometimes you have to enter into a structure wherein you might not aware about exactly which stuff is happening. You just need to go ahead and you just need to take the business. So in that regard, sometimes dilution management is also not ethical in nature. To be very honest, we are not saying that dilution management is always ethical in nature. Sometimes it is non-ethical in nature, and that lot many times the regulators came forward and put a lot of questions about various actions put up by iBanker in that regards, and sometimes they give answer, sometimes they don't give answer, so it's not really sure about it. But how they perform dilution management is very important. If we carefully see, if we see down the line, it is rights, renunciation, preferred allotment, private placement, issue of convertibles, bonus shares, open offers, sweet equity, shares with differential rights, and delisting of shares. Now we go one by one and we'll try and make you understand about this, and then moving more faster in this video. These are not the only approaches wherein you can go for the dilution management. Dilution management vary from country to country, because the reason here is, in dilution management you need the complete support of the regulator, and you need to see how deep is the market. So if you talk about fixed in interbank market or interbond market or inter fixed income market, then number one is unsaid United States, and number two is Tokyo, number three is China, whose is having approximately $4 trillion. and Indian is having $500 billion, and you're very well aware that the Indian market is not, it's not extremely deep versus we have here. Yes, volume wise you can be deep, but the offering or the new kind of concepts or new thinking wise you might not be as deep as you have your neighbors, right? So in that regards, these are the limited options we have in India. Yes, over the period of the time we saw that iBankers came forward, and what they did, they try and create an instrument which is only valid for a client. This is known as clientele or exotic dilution management. In exotic dilution management, you will do only for a particular client. You will not do for everyone. So you have a client assuming TCS, Wipro, Infi, Patni, Satyam and all, you will only do for that. But this technique or this structure may or might not valid for others. So you're not sure about it. So what are the various things? Let us go one by one. You have rights renunciation. In right renunciation, what you do, you will go ahead in the market, you will offer the right issue in which you will say all the existing shareholders have no right. All the existing shareholders have no right in issuing. All the existing shareholders have no right in issuing any all the shareholders have no right. All the shareholders have no right in terms of subscription of the right shares issued up by, in terms of subscription of the right shares issued up by the company. So take an example, you are taking an example of TCS, Tata Consulting Services. Now Tata Consulting Services would like to go ahead and would like to issue the right shares. Now if they issue right shares, the technical definition of the right shares suggests that all the existing shareholders will first get a right to buy these shares, and probably if they are not interested, then this will go to the general public or iBanker. They will depend upon the agreement. But in right renunciation, what would happen? In right renunciation, what would happen? It will not go to iBank. It will not go to general public or iBanker. Rather, the promoters will get the first right to buy these shares. What is the benefit? Their holdings will go up. So assuming you have 5 promoters in TCS, collectively their holding is 85%, and you are issuing the right shares. Of course, once you are issuing the right shares, you are I would say once you are issuing the right shares, your capital will get diluted. More amount of equity shares would be issued. But what would if all these amount of equity shares would be issued and they go only to the promoters of the company? Now in that sense, this is not a dilution. In this way, what these people did, these people simply increased their holdings in the system. This is known as right renunciation. Technically speaking, right renunciation comes very often, very seldom, not very often, and especially in the countries like India. But maybe eventually or seldom wise also, sometimes you see that the people are coming up with a right renunciation. 99.99% of such activities pertaining to right renunciation will not come in the media, because you know that if it will come in the media, then people don't understand that, and they try putting lot of questions before the public, that exactly why it is happening, who is doing, what he is doing, and so on and so forth. So right renunciation is something when the promoters get their share, when the promoters get the particular stake but not the company, when the promoters get it but not the general public. Second is preferential allotment. In preferential allotment, you will give the as the meaning suggests, in preferential allotment you will give the preference to the promoters. Now you will not give a preference to the existing shareholders, because the reason is very clear. Dilution management is going to give a huge benefit to promoters than to general shareholders. Once we talked about once we talked about right enunciation, we must have got an answer that the idea is very simple. That you need to support the promoters but not the general people. Third comes is private placement. Private placement is you all aware of. Private placement is rather than going to the public, you will go to the selective people. But private placement is also two types, as you very well understand. One type of private placement is when you are inviting everybody in this private placement. For example, you are Wipro and you wanted to offload say 10% of your equity, but you don't want to waste your time, go to the public, you want public to take up and so on and so forth. You are interested in private placement. So once you are doing the private placement, you would have two offers. Assuming ideally, if you are doing the private placement, you should have contacted all the, I would say, the financial institution to come forward and take up. But you know that this will consume lot amount of time. So what you did, you will simply move forward and you will simply allocate them to the few. So this is known as private preferential placement. So one is private non-preferential placement. One is private preferential placement. So in which subscriber would be both the same, either institutional subscribers or non-institutional subscriber. But in case of private non-preferential placement, everybody will get an offer, unlike equity. But in case of private preferential allotment, only selected people will get an offer. You will issue the convertibles, as we had a lot of word about convertibles. Convertibles, you can have equity convertibles, you can have debt convertibles, you can have principal only convertible, you can have coupon only convertible, you can have preferred convertible, you can have non-preferred convertible, you can have mandatory convertible, you don't have a mandatory convertible. So there are a lot of convertibles which you have in the market. It is up to you which kind of convertible you would like to take up and all. So that company needs to take up a call based upon the market. Of course, like I said very early, that it's these all 10 or 12 names which I mentioned, these all depend upon the market situation in the economy and the regulator. Because of course, regulator to be very open, market should be very frank, market should be very open, and so on and so forth. Move forward. You have bonus shares. You know that why issue bonus shares. Now Infosys is a perfect example of bonus shares. Infosys is approximately $8.5 billion of free cash, which is roughly 52,000 crores, 52 to 53,000 crores based upon an exchange rate. Such huge amount of cash is lying in the books, and what is going on? Nothing. So Infosys is the perfect example wherein iBanker can issue a bonus share, and they would utilize the money of this their free cash reserve of approximately $8.5 billion, wherein they will give the opportunity to the people to come forward and the existing shareholders to have the bonus shares in place. Now you have open offers. Open offers, you know that you just simply open the offer in the market and you simply say all those who are interested to wind up their holdings in the favor of the promoter, they are most welcome, and you would like to do the buyback of this. Not the buyback, you wanted to buy, and promoters would like to increase the stake. Now in this, promoters are not buying. This is a little bit kind of buyback. So you are not buying. What you are doing, you have 100 shares, out of which you are saying people to surrender your shares. Now if they surrender, your ratio will automatically get rise, so would be the amount of the dividend you will get because of the percentage. The dividend because of the percentage. Then you have sweet equity, which is very important topic nowadays. Sweet equity means you will issue an equity to those who have IP. IP could be intangibles, it could be tangible, it could be software, it could be manufacturing, it could be intellectual, it could be information technology, it could be hardware denominated, and anything. Now this sweet equity offer which you have, which this company is giving to, this is giving only to those who are bringing the IP, to the company. So sweet equity offer is not to everybody, to be very honest. Then you have shares with the differential voting rights. We know that the equity shares generally are very treated at last when it comes to voting rights. You have different kind of shares, different kind of equity shares with the differential voting rights. We can contrast this with an example of Singapore, who just approved, I would say the listing of dual class shares. It's one of the best decisions Singapore has ever And I was just reading and I got to know that the Alibaba was first interested in basically issuing $22 billion of IPO, which they did approximately in 2000, I think 14 or 13 time. They were interested in doing in Singapore, but they did with New York Stock Exchange because Singapore was not very comfortable with the listing of the dual class shares. So shares with the differential rights and dual class is one example of that. And I think very soon we would have our video how the dual class shares is different than normal equity shares, and what are the major benefits the companies are having in case they are going with a dual class shares. Then you have delisting of shares. You will simply delist the shares. Of course, if you delist the shares, the promoter percentage would go up. Yes, I fully appreciate the fact that if you delist the shares, then the company may be unlisted, would be treated as unlisted, but at the end the promoters will get a significant percentage in the company. So these are the few important stuff which you have, which generally iBankers are considering. So I'll repeat, which is right, renunciation, preferred allotment, private placement, issue of convertibles, you have bonus issues, you have open offers, you have sweet equity, you have shares with differential rights, you have delisting of shares. Of course, I would like to repeat my sentence that these all options are not the only one. Options, there are multiple options in that regards, but it varies from country to country, central bank to central bank. The reason is very clear, because country to country, central bank to central bank, you need to see, how deep is the country, exactly what all business the country is doing, and exactly who are the customer. Like if you take an example of dilution strategies in case of Singapore, it would be completely different. It would be completely different, because the point is very simple. You cannot expect that Singapore to be a limited country. Yeah, right. So these dilution strategies would completely differ in case of Singapore. Now moving higher, as you very well understand that dilution strategies are done by iBankers, and iBankers are not they don't work for charity. So iBankers don't work for charity, and iBankers will ask for a very good amount of fee. That fee is known as the underwriting commission. First of all, we would like to tell you that what are the different types of underwriting we have. First kind of underwriting, first of all, what is underwriting? Underwriting is an activity, because underwriting need to understand very carefully, because iBankers don't want free, to be honest. Underwriting may be defined as a contract entered into by the company with a person or the institution called underwriters who undertake to take the whole or part of that offered shares or debentures or both, as may be subscribed by the public, in consideration of the remuneration called underwriting commission. Thus, underwriting is an undertaking or guarantee given up by underwriters to the company that the shares or debentures offered to the public will be subscribed in full. In case the response of the public is poor, the underwriters will take the balance of the shares or debentures or both not subscribed by the public and will pay for them. Now this doesn't mandate that underwriter will buy that. Underwriter may or might not buy that. It's depend upon the circumstances, depend upon the situation, how the things would be, and so on and so forth. So this is what all about underwriting. All the big banks, they are very much in underwriting. If we take an example of, I would say, if we take an example of, just give me 1 minute, Yes Bank. If we take an example of the Yes Bank, then you would get to know that in case of Yes Bank, there were three iBankers, big. Not three big, in fact one was big, which is Goldman Sachs. In fact two, Goldman Sachs, CLSA, and Motilal. So Goldman Sachs and CSA, we know they are pretty best in underwriting. Now what are the three types of underwriting we can have, as you can very well see? One is known as complete underwriting. In complete underwriting, all of the issue of the shares or debentures of the company is underwritten and is said to be as a complete underwriting. In case the issue of the shares or the debentures may be underwritten, the person has to take the agreed risk. So complete underwriting means the person, the iBankers, to come forward and they need to take the risk. Second is known as partial underwriting. It is only a part of the shares to be underwritten, the next is not. So take a simple example, TCS is going ahead with I would say the underwriting of 200 million shares,
in complete underwriting, and assuming their I banker is Goldman Sachs. In complete underwriting, Goldman Sachs will take the complete responsibility of underwriting the complete shares. Right, that is a separate, whether it is a firm underwriting or a soft underwriting, because all three kind of underwritings may further divided into three parts. Third underwriting is second in partial underwriting. Goldman Sachs will say that no, it is 200 million shares. I don't think I can go ahead with this. So let's divide this 200 million into two parts, which is 50 million into two. So which is say 150 and 50. In case of 150 million, I will do. In case of 50 million, I may not be able to do, but I will surely try doing the same, and so on and so forth. So on and so forth. Third kind of underwriting is a safety net agreement. Now, what do you mean by a safety net agreement? In a safety net agreement, if the underwriter will fail, to sell their shares, they need to buy the shares. And if they need to buy the shares, what would happen if the share prices will go down? They would be in a big mess. So take a simple example. Goldman Sachs is doing the underwriting of Wipro, and total amount of share is 200 million, and out of which the subscription happened only 150 million. Now that 50 million is Goldman Sachs were failed to sell. Now, as per the underwriting agreement, Goldman Sachs to buy the rest of the shares, which is 50 million. And assuming the list price, the book building price is 350. Although we completely understand that, very well, that this whatever the price which we have, we completely understand that the bankers will always get at a very lower prices if they buy this is in the money, but nonetheless that's not the part of the discussion. So these 50 shares are to be bought by GS, Goldman Sachs. Assuming the book building price was 350, what would if in the next 6 months the price of the price of the Wipro will reduce to $200? Then Goldman Sachs would face a huge loss, because they bought 50 million shares, and what, at 350, market is trading at 200. So forget no profit, no loss. They are in a mess. They are simply in a mess. So they would have a safety net agreement, and in a safety net agreement, what they do, if in the next 6 months the price will fall below to that level, excuse me, you need to come forward and you need to compensate me. Now, who would compensate me? You. And who is you? It is the company. You need to come forward and you need to compensate me. That is what safety net agreement is all about. As for the SEBI listing requirement, which is ICDR, it is for 6 months, but it varies from country to country. So some countries would have higher safety net agreement with some written rules, and some country might not have a higher agreement with respect to the rules. Overall, when it comes to the overall marketing, underwriting would be divided into two parts. One is known as firm underwriting and one is known as soft underwriting. As you can very well see right upfront, in firm underwriting, you know that a firm is taking the complete responsibility. This is also known as hard underwriting. Firm is taking a complete responsibility that if we fail to sell, then we will buy the rest amount. In case of soft underwriting, the firm is saying if we fail to sell, okay, what maximum I can do? I went to Bloomberg TV, I went to Economic Times, I did so many roadshows in Singapore, so many roadshows in Malaysia. I passed the information to everybody, but what did if I fail? So you don't know, right? So you are not taking any responsibility in that regards, to be very honest. This is what soft underwriting is talking about. Firm underwriting is also known as hard underwriting, and soft underwriting is also known as best effort underwriting. Moving forward, let us take this. You have the same diagram, but here we want to tell you something. In all the cases, right, renunciations, preferential allotment, private placement, issue of convertible, bonus shares, till delisting of shares, I bankers will get something which is known as let me increase the font. iBankers will get something which is known as underwriting commission. And in the underwriting commission, now the trend is that 99.99% they won't get in cash, they will get in kind. And that kind is known as warrant. Warrant is nothing but the call options which is either given to employee or iBanker or both, whereby they would have right to buy an agreed share at an agreed time at an agreed price. But there is a difference in warrants. The difference is that in case of employees, the warrants are issued out of the money, so that there would be zero net, there would be very less, you know, there would be very less premium is to be paid. In case of iBankers, it is issued in the money, because companies really want that they should be pay the higher cost. They should be pay the because they should get at a less cost. Now, what do you mean by less cost? Take a simple example. You are JP Morgan Chase, who is doing you are JP Morgan Chase, who is doing iBanking for say Cognizant. Cognizant wanted to list their entity in India. Now, if you're doing for Cognizant and you fail to sell the shares of Cognizant, you will get in the money warrants. So the book building was at 660 and you will get at 600. Probably deep in the money sometimes. In case of an employee, suppose you are the vice president of Cognizant, you may get call warrants, so shortly known as warrants, but you will get out of the money. So assuming it has fully subscribed, so it is trading at 660 CTP. CTP stands for current trading price, shortly known as MPS, market price per share. So what will happen? You would get it probably 700, because that is out of the money. But in both the cases, the trend but as regards the fee, I would say the dilution fee is concerned, the time is changing very fast, because the days are bygone when iBankers used to get in cash. Now iBankers are getting in kind, and warrants play a very important role. Henceforth, if you are an iBanker and you are participating in the dilution management, you need to understand that you need to price it carefully and you need to craft it carefully, because majority of the times you might get your compensation not in cash but in kind. And when it comes to kind, you will surely guess surely guess in the form of the warrants. Although there are a lot of options, like convertibles, hybrid financing, but these are something which we cannot share here, right? So moving forward, this was all about the dilution management. We just summarize this, that dilution management play a very active role, and believe me that dilution management is not easy. But as we understand that a lot of actions are happening in the market, and when promoters want to increase their stake, so henceforth dilution management is very it's one of the cash cow for iBankers. And one thing where dilution management cannot possible is OFS, offer for sale, because in the offer for sale, promoters are not increasing their stake, rather they are decreasing their stake. Henceforth, this is something which is not possible in case of dilution management here. But nonetheless, before winding up, we would like to stress the fact that these are not the only options. There are a number of options in that regard, but it varies from people to people, regulator to regulator, company to company, and country to country. Like in case of Singapore, you can have variety of options which you might not have in India. So this was the total topic for dilution management. Hope you like this. We would have a lot of new topics on the way, and probably in the next week, this week we are going to be upload more than 10 new videos. You know that our website is on the way, and wherein we were launching a lot of new training programs across the globe, Asia and Asia Pacific region. So these all are the places where we are highly active. You can see that you can connect with us at Dailymotion, Dropbox, LinkedIn, Skype, SlideShare, Google Blog, Google Groups, WhatsApp, Snapchat, Telegram and all. You are always welcome to share with us in that regards. YouTube, we are moving towards 200 videos that way. You can join us at these places, and we are sharing a lot of information about financial markets and everything at these places. We welcome you in that regards. Hope you like this video. You know my contact details, Rahul Treasury Consulting LLP @gmail.com, and another is rahulmagan8 @gmail.com. My mobile number is 9899242978. You can have Skype or Twitter. You can email me Skype or Twitter. These are my contact details. Hope you are doing great. You like this video, and we thank you very much to support us on YouTube. We are moving fast, and very soon we would have more than 200 videos on YouTube, and then the January will start for 300 videos, which probably would end up by January 2017. To be very honest, it will take some time, and we all coming up with our website, and new courses are on the way. We sincerely thank you. Thank you to believe in us, and see you soon. The upcoming video would be again on investment banking, wherein we would be targeting creeping acquisitions. That is again very interesting topic. Thank you, and have a great day.